back to what Egon von Greyerz said. We're in the final, uh, if you know what this word means, denouement. The final denouement of this fiat money system, which has been going since 1945, or the worst part of it since Nixon ended the gold standard in 1971. And basically, it's finished, and it's what we're seeing as the final stages. Where, in my opinion, the line of least resistance for the politicians is to run it into hyperinflation.
Monaco 64, home of alternative economics and contrarian views. Well, today I have Clive Maund back. Clive, welcome back to the channel.
Well, thank you, Mario. Good to be back.
Yeah, it's great to have you on again. I think the last time we spoke, we hadn't had that big correction in gold and silver. But as the old saying goes, nothing goes up or down in a straight line. But what I want to talk about today, before we look at gold, silver, and the dollar index, is general commodities, and in particular copper and oil, because I remember back in 2020 when we had the big liquidity scare, the big crash in March of that year. Everything went down: gold, silver, stocks, commodities, and then after that, gold and silver picked up fairly quickly once the Fed came in and other central banks and threw all the liquidity into the system, and they started picking up before the general commodities. And I was wondering about that the other day, whether copper and maybe, let's say, oil are going to eventually pick up. And you have some interesting ideas about that. So, yeah, what do you think?
Well, I think that's exactly right. And we will look at a copper chart, or copper charts and oil charts, and they're both suggesting, in the case of copper appears to be limbering up for a breakout to major new highs, and a much more serious advance than we've seen for many years. And at the same time, oil looks like it's on lows here, and looks like it's ready to flip to the upside as well. So that fits with what you're saying.
Yeah, and I remember, well, a few weeks ago when gold and silver started correcting, a lot of the naysayers and even the the crypto people were saying, "Well, gold and silver is not really a good indicator of anything." But I think it is. I mean, the last few times, well, when silver hit $50 in 1980 and close to 50 in 2011, we had major crises back then. 1980, Volcker had to allow rates to go to 20%, or 1981, the dollar was on its back foot. And in 2011, we'd just gone through the great financial crisis, and then we had the European sovereign debt crisis. That was what triggered. I mean, silver was a good indicator, but I wanted to ask you as well. What do you think could be the trigger for oil? Because oil seems to be really in the doldrums right now, stuck around that 60 level.
Well, I rather suspect I'm not very good at joining dots when it comes to fundamentals sometimes, but I've noticed, we've got this situation going on with Venezuela, where you have the excuse of the drug running for a possible invasion or destabilization of the Maduro government, and the effective taking over of Venezuela. And of course, it's one of the biggest oil producers in the world. It's got huge oil reserves, which are suitable for the refineries on the south coast of the US. That's one thing. And I find, for me, it's no coincidence. This is joining two dots, actually, dot number one and dot number two. But Trump's now talking about, going into Nigeria to rescue Christians. Well, I thought to myself, wait a minute. Uh, what's Nigeria known for? Oh, yes, it produces a lot of oil. So I thought, well, what's this about then? Is it they want to take over the oil in Venezuela and Nigeria, or do they want to find a way to jack the oil price up? which, there are a lot of vested interests in the US, big money and so on, who would benefit from a higher oil price. So I thought, it's not that hard to make the connection between this talk about possibly taking action over Venezuela and also Nigeria. Although, of course, they probably won't be blowing up any launches off Nigeria, because it's an awful long way for a launch to go from Nigeria to the south coast of the US. So we won't need to blow them up. But you get my point that I see a connection between both Venezuela and Nigeria being big oil producers, which would explain these noises being made about Venezuela and Nigeria by the US government.
Yeah, no, and that's a good point.
Which, yeah, this of course has a big bearing on the oil chart that we're going to look at later, because I see a small bottom completing in oil, and although it may be a small bottom in oil, it could lead to a big move.
So before we look at the technical picture for copper, we're going to look at we're going to cover a topic to do with copper, but it's also at the very innermost core of the rearrangement of the economic and political world order. One billionaire has called it as it is by saying, and I quote, "If somebody's pointing a gun at you, you need that copper to shoot back." So the United States and China are battling over basically mineral supply chains and technology supremacy, mainly because globalization stepped out of equilibrium. And you can see just how, when looking at the strategy both superpowers are taking. Trump is using tariffs and deregulation to begin the process of realigning mining and securing resources on U.S. soil, while the Chinese are using their near monopoly status, scale, and reserves to their advantage. What I want to do today is showcase a company that is actually trading at its 2025 lows right now, down nearly 70% from its first quarter high. It's the sponsor of today's video and the owner of the Majuba Hill Copper Project and past producing mine in the state of Nevada. So Giant Mining Corp is the sponsor of this video. Ticker symbol is BFGFF. It's trading on the OTC market. The ticker symbol is available on Interactive Brokers and Charles Schwab, among others. So since President Trump's inauguration in January 2025, his administration has aggressively pursued policies to secure U.S. mineral independence, with copper emerging as a flashpoint in escalating tensions with China. Well, copper, if you didn't know, is vital for defense and also AI infrastructure. And it underscores America's vulnerability to foreign dominance, particularly China's control over global refining. So in February 2025, President Trump signed an executive order 14220, initiating a Section 232 investigation into U.S. Copper imports and classifying the nation's dependence on foreign suppliers as a potential national security risk. The investigation was completed in June 2025. It identified a significant U.S. trade deficit and overcapacity from state-subsidized Chinese copper production, leading to a July presidential proclamation that imposed 50% tariffs on semi-finished copper products, including wires and cables, effective August 1st, 2025. And on August 26th this year, the U.S. Department of Interior and the U.S. Geological Survey released the draft of 2025 critical minerals list, proposing to add copper along with potash, silicon, and silver as newly designated critical minerals. And one of the world's most famous mining billionaires, Robert Friedland, said the following about copper and the future for copper. He said, the world needs astronomical amounts of copper over the next 20 years. I think the world will produce more copper in the next 20 years than it ever produced before in history. And he's repeatedly said that there's no rational price for copper when the metal is essential. So effective August 1st this year, the copper sector, in my view, entered a ground floor seismic level opportunity, marking the beginning of a transformative new phase for the entire industry. What we've been seeing is the very first chance, in my view, to be part of the rebirth of the American copper mining business. And we can access it at its founding moment, as far as I can tell. So back to this speculative, I might add, opportunity here. It's Giant Mining, of course. It owns a past-producing copper mine in Nevada, one of America's best and most cherished mining jurisdictions, of course. The most critical part of all of this is that Giant Mining's share price has still not recovered at all from the April market shock. So back to the project. Well, historic underground mines at the Majuba Hill project produce copper, tin, silver, and some gold from the early 1900s until the 1950s. So they produced 2.8 million pounds of copper, 184,000 ounces of silver, 5,800 ounces of gold, and 21,000 pounds of tin. So the other major points that Giant Mining has going for it, aside from being a past producer, is the following. Well, the infrastructure is ready. They've got access roads, power supply, transportation, water supply, ore stockpiles, established roads, access, power nearby, and space for potential processing infrastructure as the project advances. Well, in Giant Mining as well, in my opinion, is probably the number one highly speculative copper play. Yes, I have to emphasize it's speculative, and we're going to see why it is so. And back to copper, we've had comments from the U.S. administration. For example, Commerce Secretary Lutnick recently said, and I quote, "American industries depend on copper, and it should be made in America, no exemptions, no exceptions." President Trump recently said, and I quote, "Copper should be made in America. It's time for copper to come home." So what makes this speculative opportunity special, in my opinion? Well, they've had good drill results. They're using modern technology now to try to find the resources. Unlike back in the first half of the century, things are completely different. Yes, the company has no debt. It's recently raised $5 million US, which is just under its market cap. So the market is not really giving it any enterprise value. But the big trigger would be drilling results that would really wake the public up, wake investors up, and that's why they've got this 5 million, and that could catapult the market cap back up to 80 million, which is where it was at the beginning of the year, at the highs. So yeah, as I've said, it's a speculative opportunity. This is my opinion. You should do your homework. And yes, Giant Mining, OTC market, ticker symbol BFGFF. So let's get back to the interview and look at the copper market now, the technicals. So let's start with copper then. I've got you sent me a few charts here. I've which one do you want to look at first?
I think it would probably be best to look at the long-term chart,
The one
Mario.
down back to 2000?
Yes, yes,
I've got that up. Let me share it. Hold on. Here we go.
yes. Yes, that's it. Yes. Now, what's interesting, very interesting to me about that chart, Mario, is if you factor in inflation over the years from the start of this millennium, uh, and you look at those peaks in copper during all those years, back in 2006, I think it was, back in 2010, then again in 2021, and over the past this year and last year, you can see that there's a line of tops there. And although each top is a little bit higher than the last one, if you factor inflation in over the years, copper has not made new highs since 2006, and that's the reason for those slanted grey bars on this chart, which are intended as a kind of uh, uh, crude way of factoring in inflation over the years. And if you factor all that in, copper has not made new highs, in my opinion, not in real terms, since 2006. And what it looks like to me is that copper is shaping up to follow gold and silver higher, which is why I've put gold at the top of this chart and silver at the bottom of the chart. So you can see that both gold and silver, gold has gone parabolic. Silver is just starting to go parabolic, even though both gold and silver are expected to correct over the short to medium term. They're still in the early stages of a massive parabolic blow off. And copper looks set to me to follow suit, which is why I've put that blue arrow on there. And you'll notice I put the correction. The early part of the blue arrow is the expected minor correction and sympathy with the gold and silver correction, and then it should break high. And once it breaks above that's upsloping line of tops, it should really take off, especially bearing in mind that there's a major supply crunch in copper. Now, of course, this depends on the whole financial system, it depends on there not being a credit lockup. And I'm of the opinion that while that's possible, unlike in 2008, I think they've got carte blanche to basically print as much money as they like to avoid it, which is what I do in their shoes, because it's the easiest way to eliminate the massive debt problem is simply to inflate it away. I'll tell you something very interesting, which is I watched a very short clip by the Swiss gentleman Egon von Greyerz, who has that big gold vault in Switzerland. And Egon von Greyerz said that he made the very important point that the US dollar expressed in gold has lost 99% of its value since 1971, which is when Nixon closed the gold window. And he said it's only got 1% of its value to lose. But for me, the key point he made was he said, it's okay, it's only got 1% of its value to lose, but that's still 100% from where we are now. And if you look at, and he's expecting that over the next few years. Now, what he's basically saying is that the dollar's going to become worthless, in which case we're looking at hyperinflation and we're looking at gold, silver, and of course, many other commodities going through the roof.
Yeah, no, I agree. And this is a good point you made about the inflation adjusted price for copper, because
Mm.
silver, in my opinion, also hasn't really kept,
No,
and
no.
it's just starting to take off. Gold, on the other hand, I think recently just
Mm.
overtook the, well, and the thing is, you have to take it with a pinch of salt. The CPI adjusted rate of inflation is probably really underestimated. Like supposedly gold went through the 1980 high, but I think that high is probably a lot higher in terms of.
Well, that's right. That's why, of course, John Williams' shadow stats came into existence precisely because of the fiddling of the data, the rigging of the CPI and so on. So that it's not these government statistics can't be trusted, which is why John Williams' shadow stats started up to give you the true, if you like, the real data based on the way it used to be calculated before they started fiddling with it.
Yeah, and you say here, Colonel Count me in, Colonel. Copper is definitely a tangible asset. And as gold and silver accelerate to the upside, it is highly likely that this in-demand metal will do likewise. Yeah, like I said earlier, gold and silver lead the way a lot of times. You've got some charts here, some other charts of copper. Uh, you want to look at
If
this
we could
one now?
go, well, if we could go to the 6 year chart
Six
next,
year,
because
this
that's
one?
that, yeah,
Yeah.
6 year. That's it. Yeah, the reason for lighting on this chart is because you can see there. What's most interesting about this chart to observe is that you see the parabolic uptrends that have taken hold in both gold and silver, and furthermore, you can see how they've got scope to correct back towards their parabolic uptrends, both gold and silver. But at the same time, you can see that a parabolic uptrend has become established in copper as well since mid 2022, that accords with the parabolic uptrends in gold and silver. So in other words, they're all three are marching in unison. The difference with copper is that it still hasn't broken above fully broken above its previous highs, or that line of that ascending line of tops that we looked at on the chart from 2000. But it looks to me, very much to me, like it's shaping up to do so. And after a minor correction back towards the parabolic uptrend, I think it's going to really take off. And once it does get above that upsloping line of tops that we observed on the chart from 2000, it's going to really storm ahead, I think.
Okay, so let's go to the next chart. That's copper. This is more
Yeah, this is 1 year.
short term.
This is just 1 year time frame, but this chart is not by itself. You can't really. I mean, superficially, it looks like maybe a head and shoulders top, but I don't believe that at all. And Um, this chart, it's not terribly useful, but it does show that copper hasn't actually done all that much this year. It rose from, I think, $4. It did rise early in the year, but basically it's been moving sideways since then. But the point is with this chart to observe, the point to observe is that the overall trend is up and is slowly accelerating, and the moving averages are in bullish alignment. So it says to me that this is, after correcting back a little short term in sympathy with gold and silver, it should take off higher again.
All right. So should we look at oil now? Because oil as well seems to be, as I said earlier,
Hmm.
lacking. So I've got here, which I've got one. It's a very short term one with the head and shoulder bottom. Do you want to look at
Oh,
that?
yes. Yeah, yes, that's right. It's
Two
a very
month,
short term, 2 months.
two-month chart.
The reason I light it on a 2 month chart because it makes it makes it easy to see what I consider to be a probable head and shoulders bottom in crude oil and in the US oil fund, which is on the next chart. But you can see there a quite fine, small head and shoulders bottom has formed there, in my opinion.
Yeah.
And you can also see a couple of gaps. So the lower head part of it looks like what's called an island reversal, technical analysis, or island bottom.
Oh yeah.
Yeah,
Oh, you know where
so
I've seen an island top? Well, almost. It looks like it's evolving. Is it in the stock market, like the Nasdaq and
hmm,
S&P? But it's the reverse one. But anyway,
yeah. So to me, I find it very. I don't think it's a coincidence that this is going on. You've got all this talk from the US government about Venezuela and possibly toppling Maduro, and what they want to do, in my opinion, is simply to get their hands on the oil in Venezuela, and all this stuff about drug running is a smokescreen.
yeah,
And this is,
they want
hmm,
lower prices, don't they? Because I
yeah,
think
no,
Venezuela is not really producing as much as they could.
well, I don't even think it's. I think there are powerful vested interests in the US, very powerful players who would like the oil price to go up. And if they've gained control of Venezuelan oil, and they gain control perhaps of the oil in Nigeria, which is what all this smoke screen about, saving the Christians is about, in my opinion, um, by having that control of a Venezuelan oil and possibly the Nigerian oil, they can determine what the price is, to a greater extent. And if we look now, Mary, perhaps at the 2 month chart for the US oil fund, the reason for selecting this chart as well is because there are a couple of technical points there that suggest that oil is going higher. One of which is the clearer island bottom that you can see with a gap on each side. That's the head part of his head and shoulders bottom. But secondly, there was very strong volume on the rally to form the right side of the head of the pattern, which has driven up the on-balance volume line shown at the top of the chart. And it rather suggests to me that this is a genuine reversal. And even though the pattern is small, it's only been going on for maybe a month or something like that, it could nevertheless be significant, especially when we come to look at the final oil chart, which is the 3-year chart for oil, where we see a possible double bottom there forming this year, between the April low, I think it is, and October. A point worth also making, you remember what was called the 12-day war between Israel and Iran earlier this year. I think it was in June.
Yeah,
That's what caused that spike in June, which you
yeah,
can see here.
yeah. Okay,
So I
great.
think that that's a possible double bottom there. And if it is a double bottom, then the oil price will not necessarily be constrained by the upper trend line shown on that chart. In other words, it could, depending on fundamental developments, it could blast through that.
Okay, okay, great. So, should we move on to gold now and maybe talk a little bit about this correction?
Yes.
And
Yeah.
I mean, the everyone's asking how long it's going to last. I think it's impossible to know. You can speculate, but for me, when we make new all-time highs, then I guess the correction's over. But the question is when is that going to happen? So, have you
Well,
got any opinions?
on the basis of proportionality, I would say that the correction will probably last between 4 and 8 weeks, which is a little bit loose, I know. But, when we're trading, we sort of play it by ear and, see how it goes. But I estimate sometime towards the end of the year it will be done.
Yeah, I think
But
the same thing happened last year, Clive. I remember gold blasted through like 2,700, almost 2,800. And then
hmm,
after the election, which was the beginning of November, it corrected down to like 2,500. And then it kept going nowhere. And then in the
hmm,
beginning of the year, this year, it was around 2,600. And then it just took off.
yeah.
So yeah, I agree with you. It's been a couple of weeks. We've had, or it's been almost 3 weeks now, the correction. So yeah, I mean, four.
Barry, I watched a very amusing video on a website called China Observer, and it showed all these young Chinese investors crying their eyes out because they bought at the top of, right before gold peaked. They were fresh from losing money in property in China. They bought all these apartments and so on, speculating in property. And they'd had their heads handed to them, you could say, over the property. But then they latched on to gold. But right before, in the last few weeks before it topped out, and they
Yeah,
were they were literally crying their eyes out. I bought gold and it went down, and they were really terribly upset about it. And I saw that and I thought, well, if this is the type of investor who's getting into the market here, and obviously this correction has got to flush these people out. So it'll probably go on for a few weeks. And then, and as you know yourself, once a trend becomes established, it keeps going until it doesn't. So you can go from a virtuous circle to a vicious circle for a while. So in other
mm,
words, you get once a that big drop in gold that we saw a couple of weeks ago, where it dropped about, what was it,
yeah.
$150 or
I
whatever it
think it was
was in,
the
in, in a day.
21st of
It
October. It was, yeah.
Yeah, it really shocked people. And what happens then is that initial shock. What happens is you get subsequent rallies and they get sold onto by people who got calls at the top. So you have
Yeah.
that's why these trends keep going for a while because every time it rallies, you get people who got calls out earlier dumping onto it.
I would say that the further along we get in this bear market in fiat currencies or a bull market in gold and silver, we're going to see even bigger drops than the one we saw. It's
Oh
going to
yeah, because if
that's
and
it's going to get
that's right.
wild.
Well, yes, because of course, going back to what Egon von Greyerz said, we're in the final uh, if you know what this word means, denouement, the final denouement of this fiat money system, which has been going since 1945, or the worst part of it since Nixon ended the gold standard in 1971. And basically, it's finished, and it's what we're seeing as the final stages. Where, in my opinion, the line of least resistance for the politicians is to run it into hyperinflation, which
Yeah,
is why
I totally
which is
agree.
why, which is why, because if they try to do anything about it, that's serious about it at this late stage, it'll just cause a complete credit lockup and a crash. Well, the easiest way out for them is just to hyperinflate it away, in my opinion. And that's what we're seeing now. We're going into the early stages of hyperinflation, and we've seen huge price rises just over the past few years, partly caused by all this money printing for COVID and so on. But it's just getting worse. And so after this correction in gold and silver has run its course, which is probably by the end of the year or thereabouts, I think the next up leg in gold and silver is going to be, especially in silver, is going to be much bigger, because on the next up leg, silver will go above 50 and stay above it. And once it gets clear of that $50 level by a reasonable margin, say about 55 to $60, it's going to take off like a rocket.
I
So
agree.
for me personally, silver is by far the best investment out there.
So, should we start looking at the gold charts? Which one
Yeah.
do you want to look at first?
Is that the 4 month for GLD? The reason I use GLD is because I can see the volume pattern and
Four
the
four
Q.
months?
4 months,
Yeah,
yes,
yeah,
yes,
that from May, the one from May, yeah.
yeah.
Okay, let me bring that up. I've got it here. There you go.
Oh, it's another one actually.
Oh,
Right,
is it?
it's one with all the writing. We can look at that later
Oh,
actually,
yeah,
because that
4 month. There we go. No,
yeah,
this is
that's it.
GDX.
That's GDX. Yeah, it would be the
Oh, here I've
GLD.
got it. We'll get there. There
GLD,
we
that's
go.
it. That's it. Yes, yes. Now that's actually a most interesting chart. It tells you, technically, it tells you all you need to know about what's going on, because we had a parabolic run up into the high in the middle of October. You can see it was a parabolic blow off move. The reason I say it was a parabolic blow off move is because one, the RSI indicator at the top of the chart had been in critically overbought territory for something like 6 weeks. And secondly, you could see how the volume became heavy on that run up, and it got heavier and heavier. And then when it broke down on extremely heavy volume, which
Yeah.
is medium term bearish. It's basically it was a panic set in to get out, and it becomes so overbought at the peak in the middle of October. It was record overbought. You could say by a country mile. I mean, it was just massively overbought, which of course it necessitates a correction. Now that ABC correction I've drawn on there is prospective, because very often in these corrections you get a kind of relief rally, which is what that B wave is, and then it dies down again. But actually, the pattern is not in any way bearish at all, because I'm looking for it to correct back towards that strong support that's shown on the chart, but probably it will stop above it, because it's overall still a very bullish picture. And you can see also that the 200-day moving average, the rising 200-day moving average towards the bottom of the chart will be coming into play at that point. And so
Yeah.
that's a very good point for it to reverse back to the upside, possibly after forming a small base pattern. So I view this correction as absolutely necessary to balance sentiment and to wring out the lowest class of speculators who were involved, as we saw in China, who were involved in the last week or two or couple of weeks of that run up.
Do you think the GLD is a good indicator for the physical gold price or the
Well, I would
because
rather, I
I
would,
think central banks they're I'm not saying this is not going to happen or couldn't happen, but central banks are still buying a lot of physical gold and they
oh
don't
yeah,
do it through GLD.
no, no. But the thing is, whether they do or don't do it for GLD, the only reason I'm using this chart is simply because in stock charts, they don't show volume. So I thought, oh, well, I'll use the GLD chart because they
Yeah,
show volume,
yeah.
so that was really the reason.
Okay, great. So what do you want to look at now?
I think
We got
um,
2 month or three month, 2 month gold.
ah, you could look at um, the SLV chart for
SLV. Let's
the
have a look.
same, because that's also an ETF and
Yeah. All
or
right.
fund, and
Looks similar.
yeah, we don't need to spend much time on this because it's actually a very similar situation to GLD. But there's one positive thing on this chart that I would point out, which is during this correction so far in SLV, you'll see that the accumulation line at the top of the chart has hardly dropped at all, which I take to be a very bullish indication.
Can
And
you explain? Sorry, explain to us what it means, the accumulation.
oh, well, what it
Right.
is, it's basically a measure of upside volume versus downside volume. Um, and the difference between the accumulation distribution line and the on-balance volume line, which is another option for tracking upside versus downside volume, is that on-balance volume is end of day, whereas accumulation distribution is like a running total, like it's tick for tick. So to me, it's more accurate because it's like live, if you like. It's like doing an intraday
Yeah.
chart. It's running all the time, if you
So
like.
is this
Whereas,
like
hmm.
volume on up days are higher than
Yeah.
volumes
When
on
it's
down
more,
days?
that's right. Well,
Yeah,
when there's more upside volume than downside volume, generally overall it's bullish.
I
So,
see. I see. And the MACD at the lower part of the chart, that looks like it could be turning or bottoming already.
um,
Or is it a bit too early?
well, it's got short-term oversold, which is
Yeah.
why I say no. It's not oversold on the MACD. What it's oversold on is the MACD histogram, which is those bars you can see on
Oh,
the
the
MA.
bars. Yeah.
Yeah, and what that's suggesting to me an escape for a B wave rally from the rising 50-day moving average, which would make sense because you can see that it has found some support at the 50-day moving average, and that could generate a minor rally, especially as that MACD histogram is at such a low reading and climbing back towards the zero line. But what further suggests to me that it's, okay, you could get a rally from the rising 50-day moving average, but the reason it will then correct back further is because there's still a very big gap, or there's now a very big gap between the 50-day moving average and the 200-day moving average. And it would be better technically in support of the next big rally if that gap closes up or moderates.
All right. Okay.
Yeah, which is why I'm thinking it will probably correct back it's to that target zone or buyback
Yeah.
zone shown, which would wring out the speculative excess, set it up for the next major rally.
Okay. So where do you want to go now?
Um, what else have we got on there? GDX 1 month.
GDX
Can you
one
see,
month.
that's over to the left there a bit.
Oh, this
Right,
is GLD.
no,
Yeah.
no, good.
Oh,
That's it.
5 months.
That's it. Yeah, that's it. Yeah. GDX 1 month. Yeah. The reason for showing this chart, or it isn't annotated, but the reason for showing it was because on the day when, this is GDX, not gold. Keep in
Yeah.
mind that this is a GDX. What alerted me to, that this that the trend was changing was that big drop on it was on Friday. It was on a Friday. That big drop. I think it was on the 17th of October. It made the peak on the 16th, but then on Friday the GDX dropped on very big volume, and I thought, "Uh-oh, what's going on here then?" And I looked at it and I thought, this thing is turning, right? And so on the Monday, where you see that what's called a doji, which is where the open and close were about the same price, that's out that point there. On that day, I actually posted an article on clivemaund.com on the Sunday saying take profits or hedge because it's going to drop.
Yeah.
And we had all Monday. It was great because we had all Monday to do that at leisure in quiet trading. And then, of course, the next day it hit the fan, and it gapped down big.
Yeah.
And God, that was the day, Tuesday, when gold really got slammed.
Um, all right. You got another GDX, or you want to go back to GLD?
Um, well, GDX is it's
Similar
There's
to
yeah,
gold and
it's
silver.
similar, but it's similar. But you can see that it was very heavy volume and it dropped down and a gap, which suggests that it's that's quite bearish, medium, short to medium term. So, which is
Okay.
why it's expected to go low. That's really about it for that.
Okay. So, I mean, from what you've said right now about gold, silver, and the miners, you have a feeling that this correction could continue and that we could see some kind of rally like the B wave, and that would be probably taken as an opportunity for those who got in late on the when the market went crazy to get out, right? And that's why you
Yeah.
see
Yeah,
wave.
I think it's still a lot, a considerable amount of speculative
Yeah.
excess to be
Yeah.
wrung out,
But
which should actually be a very good thing for longer term. And what we're doing, what I'm doing now for my subscribers, is basically taking a lot of the stocks that we sold just before it tanked from the high and lining them all up again. The same ones, mainly the same ones, but also adjusting positions, finding new ones and adjusting them somewhat, and sort of lining up the ducks, you could say. But when this correction's done, and we'll aim to buy them back, when I think the correction is done, having avoided losing some of our big gains, on this correction.
yeah, I mean, personally, I have taken some profit in the last few months from my miners, but there are people who prefer just to sit and
Hmm.
hold on, and they might actually add some more miners once you have this
Um,
action. It's
yeah,
all
what's
it,
that? What I actually consider to be a good strategy if you're in a position to do it, which not all investors are. I'm talking about probably more substantial investors, is when you see a sort of danger that occurred in mid-October of a major correction. You don't necessarily have to sell your stocks. You could just do something like GLD puts or
yeah,
puts in something as an insurance policy and to cancel out your losses. And then you can actually liquidate the puts when the correction's run its course. And it's just extra money and it covers you for any losses you might have made in the stocks. And then you can add more to your positions when you think the correction has run its course in the strongest stocks.
no, I agree. I agree. Do you want to look at some of the dollar index?
Oh yes, the dollar, yes, because exactly a week ago, Mario, I saw that the dollar was about to rally, and I put an article up on my site, which you can actually link to. I'll send you a link a little bit later,
Yeah,
saying that the dollar was going to rally, and if you could perhaps show that dollar chart, I think it's is it 4 months or 3 months? I think it is.
there's one here. Let me just bring them
Yeah,
up and then you can tell me which one it is.
Yeah, USD 3 or 4 months. I'm not sure which one it is. It may even have been 6 months.
There's this
No, it's
one
not.
here.
It's not that one. No, it's not that one. It's
Uh,
you. Oh, sorry. It's yes, that's right. It's a 1 year. It's a 1 year. That's it. You had it there.
there. Okay.
Yep. It's the other one.
Oh, this one.
Yep.
Okay.
Now, no, well, yes. A week ago, this chart was posted on the site, and I said, "Uh-oh, it looks like the dollar's going to rally." It formed what looked to me like a large base pattern during the summer. You see on here there's a double bottom, and of course gold has just come off the boil, which further suggests that the gold might be anticipating a dollar rally. And the other point to observe on this dollar chart, you see the MACD at the bottom of the chart, how the trend has been trending higher since late April. The
Yeah.
MACD, as that potential base pattern has formed, everybody's been bearish on the dollar. There's been so much negative press about it. And I thought, wait a minute, it's just getting too many people on one side of the boat. And I saw what I regard as what I thought was a potential bull flag in the dollar. And I thought, well, I want volume corroboration of this. So I went to UUP, which is that chart. There is another UUP chart for 1 year there to the left. Okay, so you had it there, just to the right again. That's it. Is that it? Uh,
Yeah, there's
UUP.
volume here, isn't
This is it. Yes, this is it. Sorry. Oh, we were looking at UUP all the time, actually. No, no,
it?
that's correct. That's correct. That's it. UUP 1 year. Now, the difference here is that it's very similar to the 1 year dollar chart, but in this case, this is a dollar index bullish fund. In this case, rather than marking out a head and shoulders, sorry, a double bottom, which we saw in the chart for the dollar, UUP has marked out a head and shoulders bottom. And while you can't really see what's going on in the volume pattern there, you can see at the top of the chart that the accumulation line is overall strong.
Yeah, that's right. That's right.
Yeah, relative to the price track. And that further suggests to me that this thing was going to break to the upside. So it formed, like the dollar itself, it formed another, what looks like a bull flag on the right side of it. So if we now go to the updated chart, which is a 3 month, I think, that's it, UUP, it broke higher and it's continued higher over the past few days. So
I see.
it's risen quite some way above its falling 200-day moving average with a potential bullish cross of the moving averages pending. So looks, and that rather bullish looking setup for the US dollar, of course, would kick the ball downhill as far as the precious metals are concerned over the medium term, which is another reason for them to correct.
I see. Before we wrap up, Clive, can you tell the viewers where they can find your work and what you provide there?
Yes, it's simply go to clivemaund.com and you can take out a trial subscription for $75, or you can do a 3 month for $150. And and I cover mainly the precious metals, gold and silver, but on occasion also copper, gold. It's commodities basically, or metals, and sometimes look at the stock market as well. And I try to do updates as frequently as possible, but I can't get round everything because there aren't enough hours in the day. I try to, when I'm writing up a stock, I try to tell a story, which you'll see if you link to my copper article, actually, Mary, or that dollar article. I'll send you links later. But I'm trying to tell a story.
Yeah,
So, for example, there was a story with the US dollar, but it takes time, to annotate those charts and write it all up. And there's thousands of stocks out there, so I can't do it for all of them, but I do the best I can, and I simply have to do the work on the basis of the highest priority. So if I see a stock that I think is going to make a big percentage gain in a short space of time, that's going to get priority. And
great.
likewise, if I see a danger of a severe correction, I'll drop everything. And that's what I did in the middle of October, and warn people to take profits or to hedge.
Yeah,
So, my people, I told people after that correction started, I said, the best thing you can do now is go on vacation, go and play golf, go fishing, and said, just forget it. We made a huge profit. Just relax, go away, do something else, do whatever it is you enjoy doing. And we'll prepare for when this correction has run its course. I say there will be opportunities in the meantime, and I'll try and pick up on a course, but overall, the best thing to do is just sit back, count yourself fortunate that you've got out of a handsome profit, and we'll lie in wait for when this correction is done and then move in big time when we think it's getting moving again. So, and I said, there's no point, as far as I'm concerned, a person who works hard all the time, that's not the mark of a successful person. The whole point about, making good profits or winnings is to know when to take your foot off the gas and relax, because that restores you for further work and interest in the subject later on. So I said to people, go play golf, go fishing, watch movies, whatever it is you enjoy doing, have a rest, and we regroup and get back into it when we think that the gold and silver I'm talking about is when we think this thing has run its course, this correction. But in
well,
the meantime, there's other opportunities like this oil one we're seeing now, which I believe is an opportunity. I suspect is an opportunity. So
great,
yeah,
great. Sorry, Clive.
that's it. Yeah, that's basically about it, Barry. Okay.
No, yeah, I mean that's great, and I'm gonna provide the viewers a link below in the description to your blog, and yeah, we'll keep in touch, and always nice speaking with you.
Right. Thank you, Mary.